Well, we are just a hair's breadth away from the festive season, which inevitably can mean spending money, more money than most of us want to spend. We've got Christmas itself, presents, holiday maybe, things to do for the kids. But this year might look a lot different for many of us. Inflation and interest rates are falling, yes, but Kiwi households are still doing it tough. New data from Central Credit Bureau Centrix shows mortgage and consumer arrears remain high and could stay that way into the new year. Around 458,000 Kiwis were behind on their payments in September, equating to 12.12% of the credit active population. And while the figure fell, actually, by 3,000 on a monthly basis, arrears are actually 3.5% higher than last year. Centrix Managing Director is Keith McLaughlin, and he joins me now. Keith, good afternoon.
Good afternoon, Leah.
Keith, just over 500,000 Kiwis, as I just said, are behind in payments. Are we talking, is this a mixture of credit payments and mortgages?
Yes, it is. It's a credit transaction, so it could be a personal loan, it could be a credit card, it could be a mortgage, or it could be just the purchase of some goods. So, yes, it's a credit or a loan account.
So for many, obviously, I would say there's very little disposable funds, isn't there, for discretionary spending?
Yeah, look, I think when you look across the population, there's a certain sector of the population who are and have done it really hard over the last 12 months.
Yeah.
And other people who probably didn't have the reserves, a certain demographic where they are generally younger, renting or into a new property, carrying big mortgages, and have been caught by both the cost of living increase and the rise in interest rates. And then on the other hand, you have those who are pretty well established, probably either paid down or paid off their mortgages, so they haven't been caught in that trap, and they have available funds to spend. But they have been cautious over the last 6 to 12 months and probably deferred discretionary spending. So they'll spend things like overseas trips, but they won't replace their car, they won't do renovations, they'll hold back on discretionary items.
Just being a little bit more conservative just for a bit. Keith, is your data showing or are you expecting an easing of financial pressure on households over the coming months in time for Christmas?
Well, yes, certainly as far as households are concerned, the arrears have stabilised, and if anything, are now starting to reduce. So I think that sends a signal that households generally have their budgets under control at the moment. Now, the seasonality dictates that there's always a lift in spending, November, December.
Yeah.
I think it's a change of seasons where people are out a bit more than they would normally be. There's the Black Friday sales and the inducement for people to spend a bit more money than they normally would. So we normally see a lift in spending November, December, and then a tightening again in January, February.
Yes. Having said that, did I read that financial hardship cases are actually falling?
Yes, they have over the last month or so, but they are a lot higher than they have been historically. And the hardship is not really a bad thing because generally it applies to a mortgage. And with what's happened over the last 18 months to 2 years as far as mortgages are concerned, there has been a lift in interest rates, which everybody knows about.
Yeah.
That in itself isn't the problem. I don't think interest rates are really that high at the moment, but they are compared with where they have been, and the speed in which those interest rates went up caught a lot of households off guard, and they didn't adjust their spending habits to take account of that. So the hardship really is a time when the borrower goes and talks to the lender and says, look, I've got a bit of a problem, can you help me through this? So it's not a bad thing, really. It means that there's communication between borrower and lender.
Can we have a quick look at the businesses, Keith? Sadly, companies have, the companies that have gone into liquidation, that's climbed, hasn't it?
Oh, yes, it has. And certainly over the last 3 to 4 months, it's accelerated as far as growth of liquidations are concerned. And also company closures where people have just walked out and shut the door behind them. Because, a company's not liquidated unless somebody actually has the motivation to liquidate it. So quite often companies just stop trading and walk away from that. And there's been 44,500 over the last 12 months that have just closed the door and walked away. There is a reason for that. I think, particularly in New Zealand, we have a high proportion of small and medium businesses.
Yeah, very
and
high.
They don't have. Yeah, they don't have the reserves. They don't have the available cash. A lot of them are funded by the proprietor through a mortgage over their own household, their own property.
Yeah.
So when you see an increase in interest rates, that does affect the costs that the business has to pay out. There's also been an increase in staff costs to keep up with inflation. There's been an increase in cost of goods sold. So generally speaking, businesses have been hit with some significant cost increases over the last 12 months. But to counter that, discretionary spending has fallen away, and therefore consumers aren't spending money the way that they possibly have done in the past.
Yeah.
Therefore, cash sales have dropped, or the cash across the counter has fallen away. So you've got a business where the revenue is falling and costs are going up, and that inevitably leads to some problems in that business.